let's run up a milli.
If you're trying to kiss ass, better get a room. If you got no cash, let the credit boom. But you gotta pay tax on the revenues.
What's up, guys? It is Friday, December 9th. It's 12:32 p.m. and this is the crypto newsletter. And I just had to start it off with this video interview with Jim Cramer. He says the whole thing seems bottomless. It's just a giant con. And he single-handedly picks out XRP to say it's a con. And it's just funny because this dude's wrong about everything. And it just shows how close we are to XRP mooning, because if he's taken this deliberate effort to just keep kind of hammering away, it's a con, why are we showing these stuff? Then you know that we're at the moment. Like, he says his job is to make his viewers money, but like, he's with the mainstream media. Like, who else is gonna be able to buy the bags once it goes off at the top? How are they going to sell if there's nobody buying? So at that moment, when it's all up a ton, that's when he's going to come back on CNBC and say, you know what, I was wrong. It's not a con. You should buy. And that's when we probably should sell. So taking a look at these mainstream narratives and what they're saying, we can counterplay it and get a better and use that as a tool with everything else that we're using to know when we should start getting a little excited or a little bit cautious, right? So let's play this.
And check in with Jim Cramer. Jim, what would you like to talk about this morning?
Well, I think we have to distinguish between the notion of what blockchain is. No one thinks blockchain is bad. And what happened here, and I thought you guys did an amazing job. I think Kevin O'Leary's caught up in what I would describe as a suboptimal situation. And I think you did your best to get to the bottom of it, but the whole thing seems so bottomless that I don't know how to fathom it.
Yeah, I mean, we're all trying to figure out what happened. I think Kevin's right. It's going to be years that we're hearing about this. Once bankruptcy courts get involved, it's going to be a very long unwinding. I don't know about Bitcoin. I think that one's different than a lot of the other coins, but I think the marks that came with some of these things are enough to leave you scratching your head.
Well, everything you said was true. I mean, at the end, I think that Kevin said that everything you said. I mean, the problem is everything everyone says is true about this, except for it's just a giant con. And remember, the con is not blockchain is great, but we keep conflating blockchain with the con, and I don't know how that can continue. I mean, this thing, all these different prices, like we put up XRP and Solana and Dogecoin. Those are all, I believe, con.
Yeah.
I mean, why don't we just put up like a bunch of stocks that are valued at the same size? So I'm tired of the con. I thought you guys did a terrific job. And I love I love blockchain, but it has nothing to do with what happened. That's like saying, you know what, I really love the fact that we put up cryptocurrencies. There's nothing to love. Technology's good, but it's... I mean, if we think that the XRP slash USD coin is something that we should be following, well, I mean, we should be following we should put up like Rent the Runway and Stitch Fix up there. I mean, honestly, let's put up
those CEOs on too, I guess.
I don't know. Let's put up Sienna up there. I don't know. I mean, I just find it's just a random group of things that we put up, and that I question that because I'm busy trying to find how to make money for people. And I don't want to try to figure out how to lose money for people.
Well, I'll tell you what we've been watching
job's to try
most
to
frequently.
I've lost money. I've had some bad ideas, but I don't put them up there every 5 minutes.
Well, I will say the thing we've been watching most frequently is the 10-year, and I think that's going to dictate.
But I think Amazon's big, and maybe Apple should be up there, and maybe we ought to put, I don't know, Microsoft, and then Solana. Okay. I don't know.
Jim, thank you.
I thought you
We're
guys
going to
did
hear more
a
of your
great
thoughts
job.
in just a few minutes.
I thought you did a great job, and that's what matters for our viewers and our readers. Okay.
Thanks, Jim. We'll see you in just a few minutes.
So isn't that ridiculous? Like, this guy is something. So now next news, we got the Regulation, Supervision, and Oversight of Crypto Asset Activities and Markets Consultative Report. This is from the Financial Stability Board. So effective regulatory and supervisory framework should be based on the principle of same activity, same risk, same regulation. In 2022, the FSB, as mandated by the G20, has examined regulatory and supervisory issues raised by crypto asset activities with a focus to address financial stability risks. Building on a comprehensive analysis of market structure and an extensive survey on national regulatory approaches and an assessment of challenges and gaps, the FSB proposed high-level recommendations to promote a consistent regulatory framework. This report describes outcomes of these initiatives, covering essential activities and interconnectedness of crypto asset markets, applicable international standards and regulatory and supervisory approaches to crypto asset activities, along with issues and challenges as well as potential gaps in regulatory, supervisory, and oversight approaches to crypto asset activities, and a set of 9 high-level recommendations. So the high-level recommendations seek to promote the consistency and comprehensiveness of regulatory, supervisory, and oversight approaches to crypto asset activities and markets, and to strengthen international cooperation, coordination, and information sharing. The recommendations apply to any type of crypto asset activities and associated issuers, service providers that may pose risks to financial stability, and are in complement with the high-level recommendations on global stablecoin arrangements. So the FSB has been working closely with the IMF, the World Bank, the Basel Committee on Banking Supervision, the Committee on Payments and Market Infrastructures, and the International Organization of Securities and Commissions, and the Financial Action Task Force to ensure that the work underway regarding the monitoring and regulation of crypto asset activities and markets is coordinated and mutually supported. If there's any kind of, I like to say, consortiums, groups to watch to get like some, to deep dive on and get some insight earlier on than most people, these are the ones you want to look into on an international level. These are the guys at the top of the pyramid, and they're pulling the strings, and whatever they are going to try to implement, I want to ride those coattails. So that's consortiums to watch or regulators to watch. These are the ones. Then FSB is soliciting comments from the public on these recommendations. A set of questions are proposed that the set of questions for this purpose are included in its proposed framework, and it's due by December 15th. So a lot of things around that time frame. Let's look into this and see what they're kind of proposing for a framework. So this is 77 pages. This might be a weekend read. I don't know, man. But yeah, so let's actually just save this for maybe a deep dive or something. But this is going to give us some insight into the international regulatory framework that they're going to try to impose, as well as they're going to be talking a lot about global stablecoin arrangements. So I would love to, I'm going to do a deep dive this weekend on this to see what they're talking about when it comes to the global stablecoin arrangements, because we've seen a lot of documents with that. And if, we see something that kind of pertains to, XRP or the XLMs, then we definitely want to know what's going on there. So let's go now into India looks to coordinate global crypto rulemaking as it assumes G20 presidency. So India took over the G20 presidency at the start of the month and now has a year to coordinate international guidelines of crypto. So India took over the G20 presidency at the start of the month, now has a year to coordinate international guidelines around crypto. And in India, a country that has at times sought to ban and severely limit crypto usage within its borders, has, as of December 1st, assumed the presidency of the Group of 20, the intergovernmental forum of some of the world's largest economies, just as much of the world is pondering whether stricter regulation of the industry is needed. As India takes over the group, which includes 19 nations in the European Union as a bloc, for the next year, the country will bear the responsibility of shaping the group's agenda. The prime minister there is no stranger to crypto. He has previously called for global cooperation to tackle challenges posed by cryptos as the technology makes decisions taken by one country inadequate to meet the challenges. India and its prime minister will host the 18th G20 summit in New Delhi from September 9th to 10th in 2023. The prioritizing of framing globally coordinated crypto rules reflects a renewed urgency for tighter regulations amid another chapter of crypto contagions triggered by the collapse of FTX, a larger IMF role. India is looking to the IMF to lead consultations around the question of how to regulate crypto assets during its G20 presidency. This could be a strategic geopolitical shift away from the Financial Stability Board, the international financial watchdog that has been the de facto leader in framing rules. Recently, the FSB proposed comprehensive international crypto rules. The chair of its crypto working group urged authorities to agree on global norms for the industry, even as he warned that crypto would soon threaten global financial stability. The IMF is a member of the FSB, but the FSB, established after the 2009 G20 London summit, is seen to be closer to the G20 and the US at a time of Russia's war against Ukraine. India may not want to alienate its old ally, Russia. Instead, a subtle shift towards the IMF may be seen as more neutral. The Indian Finance Ministry's role, so it goes into that all. The first of around 40 meetings in the finance track, the Finance and Central Bank Deputies meeting, will be held from December 13th to December 15th, followed by the G20 Framework Working Group meeting on December 16th to December 17th. So a lot of things happening around this time, December 13th to December 17th. So India's position on crypto, they refrain from taking a clear position on it, but this has not stopped India from imposing stiff taxes that have helped crush the local crypto industry. Other macroeconomic crypto contagion factors are exacerbating the situation. So India would introduce its budget for the 2023-2024 fiscal year, February 1st, 2023, which is during India's year-long G20 presidency. The country could unveil new crypto-related tax rules that might be aligned with the G20 that would require a complete rethink. He introduced rules for crypto if it considered an asset in India, but the nation's central bank is responsible for overseeing crypto regulations if crypto is considered to be a currency. The Reserve Bank of India has maintained a view that banning cryptocurrency usage within the country is most suitable choice for India, and that CBDCs could kill whatever little case there could be for private cryptocurrencies. So there we go. And then the CBDCs retail and wholesale started already for India last month. So now let's keep going, because now they're saying FTX is not the end of centralized exchanges. And I believe that to be the case as well, too. You're going to see these traditional players launch their crypto exchanges pretty soon here. December could be the month where they do it, or it's going to be 2023, because once the regulations, the guidelines are set, you're going to see the traditional players step in. We've already been seeing that. And I keep bringing it up. Fidelity, Charles Schwab, Citi's crypto exchange. So we're very close to the moment, I believe, because I believe Charles Schwab just took over TD Ameritrade, and then you got Fidelity and Citadel Securities, as well as Citigroup, I believe as well too, are creating a crypto exchange called EDX Markets. So they're merging to form a cryptocurrency exchange named EDX Markets. And we've already seen Fidelity launch they already have Fidelity digital assets for institutions, and they're launching their Fidelity crypto for retail. So they're gearing up. Everything is coming in order here. So they're going to unlock the demand Unlocking this demand requires a platform that can meet the needs of both retail traders and institutional investors with high compliance security standards. Once we get that regulation or that framework to abide by and compliance, then these will launch, and then you're going to see the floodgates open. The floodgates will open. So it's not the end of centralized exchanges. It's the end of unregulated centralized exchanges, basically. But how could climate-related financial risk be captured within the existing Basel framework? The Basel Committee has just published answers to frequently asked questions. I covered Basel 3, which is going to happen January 1st, 2023 in my deep dive yesterday. Yeah, so that's this video right here. They call XRP the golden goose. So if you want to go watch that, I cover that in there. And if you haven't already, subscribe to the channel and get updated real time with all these videos that I'm putting out. I'm putting a lot of videos out every day. Just trying to keep you guys updated as far as the market goes, the news goes, and deep dives. We're bringing all three aspects to the table here at Stargate, and we're just trying to give you a well-rounded experience here, because all these things play a role in coming out on top at the end of all this, right? So let's keep going. So this is so crazy, like just life, man, and just how either coincidence, well thought out, but at the end of the day, it's crazy how all this lines up. But we all know about the ICE-9, right? We know about ICE-9, and the lyrics from the Ripple song from the Grateful Dead mentioned yesterday is ICE-9, exactly what Jim Rickers once mentioned. Crazy. So we know about the ICE-9 financial freeze, but then you have here the Grateful Dead Ripple lyrics, because the Grateful Dead has a song called Ripple, and right here, Ripple lyrics, ICE-9 publishing, right? And then if we keep going down here, this is David Schwartz, CTO of Ripple, saying, if you go, no one may follow. That path is for your steps alone. RIP Robert Hunter, an inspiration to all. Without him, Ripple would not be Ripple, the genius behind the Grateful Dead. So they're big Grateful Dead fans. The Ripple, like Chris Larson, David Schwartz, and he had said without Grateful Dead, Ripple would not be Ripple. And then you had how the lyrics for the song Ripple are ICE-9, and it's just crazy how that all lines up. But let's go to the next thing here, because this is Grateful Dead, Ripple Decode. Chris Larson mentioned it and said they took inspiration from the song. The new version of the song was uploaded a few days before the lawsuit started, December 17, 2020. You see everything in the comments. David posted, without Grateful Dead here, there would be no Ripple. Chris Larson too. The messages in the new version of the song is not by coincidence. The financial system will freeze, ICE-9, and with the liquidity crisis XRP is needed, can't get any more obvious. So they had updated the Grateful Dead video here a year ago, or it was, when was it? December 17th, 2020, 2 years ago, 2 days before the lawsuit. Yeah, 2 days before the lawsuit. And it's just funny, the songs Ripple, and then they're obviously big Grateful Dead fans. They were in contact with people from Grateful Dead because they got the domain name. And just in this video, all the like Riddler stuff that we see and stuff like that, it's just crazy how it plays out and how it's all like coincided, like the tarot deck, you know. So there's definitely some codes and innuendos in here that we got to find out. But that is for another video for sure. Just very interesting stuff here. Now we got Digital Operational Resilience Act. DORA has just been adopted by the European Council. Discover how we think institutions can unlock maximum value while becoming DORA compliant. So operational risk. Preparing for the new digital operational resilience rules. Are financial institutions ready for DORA? So rapid digitization of the European financial services sector in the last 2 decades has put technology at the center of all financial activities, exposing institutions to a broad set of new and emerging risks. In response, institutions have built out controls aimed at mitigating these risks and have developed backup protocols to keep the lights on in an event that critical digital infrastructure fails. At the end of the day, we all know there needs to be an event for the grand finale to happen. So this is involved with IT, Digital Operation Resilience Act. This is something we got to get Alan on to cover, right? Maybe we'll do a deep dive on this, me and Alan, and then kind of lay out what we think is the most plausible scenario and how we can protect ourselves from whatever happens, just in the same way that they're protecting themselves as well too, and keeping the lights on. So no other advanced economy central bank has committed to issuing a general purpose CBDC, but with our EAUD pilot program in full swing and changes in the digital economy and money and payments landscape occurring at a frenetic pace, the bank is keeping an open mind. Reserve Bank of Australia, they have their digital Australian dollar pilot in full swing right now. So we're seeing all these countries going on here and getting the wheels going. So DTCC, quadrillions in derivative volumes. As quantum computing reaches early widespread use, cybersecurity specialists warn that long-established protocols will be crackable within mere seconds. I know one network has been pairing is ready, XX network. This was back, 2-minute read, November 30th, 2022. Cybersecurity specialists are warning the world that long-established encryption protocols will eventually be rendered crackable within mere seconds. Why do I feel like this is familiar somewhere? I think it was something with The Simpsons, maybe. I'm going to have to see and look that up real quick. Let's see. Yep. So it was The Simpsons, man. That's crazy. I remember that in my brain, man. All right, let's hear it.
Aren't you the plant's Y2K compliance officer?
Absolutely.
Must have been hard debugging all those computers, huh, Homer?
Doing what now?
You did fix them, right, Dad? Because even a single faulty unit could corrupt every other computer in the world.
That can't be true, honey. If it were, I'd be terrified.
8, 7, 6. We want to thank Dixie Brand Mayonnaise. Woo, Lordy, what a mayonnaise.
3, 2.
That's Homer Simpson's computer.
Oh God, it's spreading!
Oh no, it's happening.
Who's gonna clean up all those jets?
So Y2K maybe might have been a computer virus back in the day. We're gonna have to get Alan on that. See what's going on. Yeah, like a millennium bug, something with that. Okay, so if Tether implodes after the FTX crash, is a game over for the whole industry? Is the danger real? I got two things on my eyes: Binance and Tether. So I'm gonna be doing deep dives over the weekend, trying to figure out the best course of action in an event that Tether goes down or Binance goes down. Those are definitely the two most likely that would, or both, right? I'm sure they both go hand in hand. One crashes, the other crashes. In the Discord yesterday, if you haven't already joined, link will be in the bio. I had said in the announcements, because I saw real quick that Coinbase had tweeted, switch your USDT to USDC, and then they deleted it 5 seconds after posting. Switch to a trusted stablecoin swap from USDT to USDC today with 0 fees, and then they deleted it. They ended up reposting it about like 30 minutes later, so we were on top of it right away. But now it's like the talk of the town all today, because it is kind of like one of those things that you see and you're like, all right, are they trying to give us a hint here to something? And I believe that to be the case. Or you know, that you have the CTO of Tether coming out tweeting back to them, but you know, we can't trust anybody nowadays in this space. And it's funny because you look at this and we're looking at Bitfinex Tether, and so Bitfinex would be a likely, go down, Tether would go down, Binance would probably be tied into that. I heard that like Tether is very tied up with Alameda Research, with FTX, so like if anything, that seems like the plausible scenario. So we'll be watching that, keeping everybody updated on that over the weekend. So now let's go into this. Some central banks are reportedly looking to issue a CBDC within 10 years. Generally, 35% of central banks are more inclined to issue a CBDC despite recent events in crypto, the official Monetary and Financial Institutions Forum said in a report surveying 18 entities. So cryptos is in the depths of a winter recently spurred by bankruptcy filings from some of the most prominent companies, including FTX, Celsius, and more. But these market conditions have only convinced countries to develop a central bank digital currency, and no later within 10 years. We already know the timeline. It's not going to be in 9 years, 8 years, 6 years. It's going to be 2025. We'll see a lot of these things already in place by then. So a CBDC is a digital currency issued by a central bank. 2/3 of the central banks surveyed said they would issue a CBDC within 10 years, and none said they would issue one later than that. So the OMFIF is an independent think tank that focuses on global policy and investment issues involving central banking, economic policy, and public investment. And yeah, so we already know that they're going to be gearing up for that. However, CBDCs are not without their risks and challenges. They could expose economies to greater systemic financial risk brought on by volatility and sudden foreign exchange fluctuations. Plus, central banks will have to work out how they can use a CBDC to ensure inclusion if not everyone has access to digital technology. There we go. Hong Kong to subject crypto exchanges to the same laws governing traditional finance. The new legislation will bring a licensing regime for the virtual asset service providers, requiring them to pass strict anti-money laundering and money laundering guidelines. Makes sense, right? The two kind of industries, traditional finance, decentralized finance, are merging here, and that's set to come into effect January 1st, 2023. So a lot of things are going to be happening in the first half of next year. We got to be prepared. So if you're not already in the Discord, link will be in the bio. You're going to get updates in real time right in there. Then what is an inflation hedge? We're going to see massive inflation, finding stability in today's markets. So they were saying that fiat currencies are naturally inflationary. So how can they be inflationary hedges? So I think what they're saying here is to buy the currency with a lower inflation rate, keeping more of your purchasing power than if you just kept your local currency. So that depends on where you live in the world. And so digital assets, cryptocurrencies are a good inflation hedge, commodities, government bonds, it says, real estate, and just finding stability in a diverse portfolio of stable assets. But we do know that, eventually the bonds are going to implode. So I would say real estate, commodities, cryptos. So U.S. lawmakers want environmental agency to study crypto mining's energy impact. The Crypto Asset Environmental Transparency Act would direct the EPA to impose greenhouse gas emission reporting rules on crypto mining facilities and assess their overall impact on the U.S. environment. So what would they need to implement if this went through? The miners, they would need a carbon credit kind of tracking solution based on DLT. And we already know XRP and Zange with that carbon credit solution on the XRP ledger for a more transparent kind of look into these mining activities in the certain facilities. Are they using greenhouse gases, etc.? Then we have that. This is the article from Coinbase pushing to use trusted Usdc over Tether's USDT. The exchange is urging users to make the jump to USDC, what it considers to be a reputable asset amid uncertain times. And that's just kind of to the point right there. Volatility index paints a gloomy picture for Bitcoin and equities. Bitcoin continues trading like big tech. The cryptocurrency is in trouble too. That's why we're watching the stock market to Bitcoin chart for correlation and looking at, if we already said that if this breaks down, then cryptos are outperforming the stock market. But if this starts to rise here and the stock market starts to outperform Bitcoin, then we know that scenario is playing out as far as this article goes. So that's why you want to be in the Discord for those market updates. So a key measure of market volatility is pointing to an extended bear market, and it's bad news for Bitcoin, it says. Yeah, that's something that we're just going to have to watch over the coming weeks here. I do think we're in a critical time period for the month of December. So we definitely need to be more focused on the charts because I do see a big move happening within the next week here. So we want to be on par with that. Then Paris blackout, widespread cuts in several districts tonight. It lasted 10 minutes. The electricity suddenly cut off. No network, no electricity. The red lights were off. Notre Dame was off. Neither the internet nor the network, nothing works. Kind of goes back to what I was showing you with that Y2K, I think it was, as well as that Project Dora. So all this stuff, man, it's playing out. It's happening in kind of like short instances. But what if there was a global blackout like that? They would be the perfect time to reset the system. So this is definitely on the radar. And we know that ultimately one day this will happen. Flare. So they got more updates on the token distribution event. It's T-minus 1 month, so we're a month away. And they got 2 new supporters for the exchange. Exchange is supporting it, eToro, Bitflyer. Still waiting to hear from Coinbase and Binance US. Then the US Office of the Comptroller of the Currency is warning banks take caution when dealing with crypto and related businesses. They're worried about crypto's interconnectedness. And that kind of goes back to the Financial Stability Board about oversight of crypto asset activities and the interconnectedness of it. Right here. So it's talking about, essential activities and interconnectedness of crypto asset markets. So when we go through that document, we'll find some key things in there. Then we saw here, MasterCard director, FTX crash won't dissuade institutional investors to continue exploring crypto. If anything, it's getting them more involved into it at these cheap prices. And they have the opportunity to come out saying, hey, we're the good guys. We're not going to do anything of what happened the past year. So I see that being the case as well. Then we have the CTO of Ripple, David Schwartz, saying when you buy an asset in the expectation of it appreciating in value, whether it's a security, a commodity, a collectible, or whatever, its present value and everything built into that doesn't matter. You get 100% of the value of that, but you pay 100% of the value of that too. That constant will have no effect on your gains or losses. All that matters is what can change. If what goes into its value changes, say increasing by 10%, you will make a 10% profit. If it goes down, decreasing by 10%, you'll take a 10% loss. So this leads to some counterintuitive conclusions. For example, if you think Bitcoin use will explode in the future, understand that you are paying for that belief. It's built into the price you pay. If people didn't think that the price would be lower and you would get more Bitcoin for the same money, what matters when you buy an asset for speculation is what will change over time. Will it get better or worse? Will its value grow or will it shrink? Poor present value is a plus. It means you pay less for the same amount of expected future growth. When you look at buying something as an investment, particularly something that doesn't produce a revenue stream just from holding it, what matters is how you think its value will change, not what value it has right now. And that's what we're doing here. I mean, we're buying XRP And at these ridiculously low price levels, it's kind of unbelievable because of its future value. We know what the future value of it and what it's going to be. So that's why when we see stuff crash down like this, we're not, just selling out and walking away. We already know ultimately the future of it and kind of what they're doing, and their expected future growth is going to be huge. So we're buying XRP right now. And if we were to sell out or lose some, we're thinking about it in terms of future value. If we think XRP is going to be worth $100 per coin, if you were to have to sell some XRP, say 10 XRP, you're giving up $1,000 in a sense. And that's how I like to think about it when going about buying XRP or thinking about trading as well too, or even putting money into the market. If I'm able to get 1,000 XRP, I just multiply that by $100, and I'm like, I just secured $100,000 in the future. So future value versus present value. Then former White House advisor Carol House says the biggest clarity in the industry needs is the definition of a security versus commodity. She points out that the DCCPA legislation does not provide clarity on that core issue. Let's hear it.
That I see into your honestly, I think some of the regulatory uncertainty claims I find a little unfortunate, because I feel that there's clarity around what happens if you are a security or if you are a commodity or when you're a money substitute. Those are the frameworks that already exist.
We still don't know if Ethereum is or is not a commodity or security.
So that's the right point that I really appreciate you pointing to, because even the legislation like DCCPA that provide potentially clarity on who covers spots markets, which would be a new authority, it really doesn't provide clarity on that core issue, on whether or not you are a security or a commodity. And that's really the key thing that I see industry looking to regulators to provide that clarity for. Yeah, honestly, I think.
All right, so that's what is kind of being hashed out as far as the case with Ripple and SEC, as well as what they're trying to figure out as far as the US and all these regulatory agencies. They can't figure it out, but I'm sure pretty soon here, December, first quarter of next year, they'll get it hashed out. The US banking agency, the U.S. Office of Comptroller and Currency, called out the unprepared crypto industry, and the agency chief says the lenders it oversees are generally getting more crypto shy after FTX went down. Then we have this. So XRP is more decentralized than like most of the cryptos out there. No entity on the XRP ledger controls more than 2 validators or 5.7% of the vote. So when people are commenting Ripple centralized or this, that, and the other thing, now the XRP ledger is most likely, I would say on a limb here, the most decentralized ledger out there. So, and there's the proof on it because you can verify it because we're dealing with DLT here, right? So that's it for this newsletter, guys. Come join the Discord. Link will be in the bio. Say what up. I'll say what up too. And I'll see you guys in the next video.